Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yantai North Andre Juice Co.Ltd. Annual Report. Yantai North Andre Juice Co.Ltd. is a leading manufacturer and exporter of fruit and vegetable juices in China. The company offers a diverse range of products that cater to various customer needs. The company's product line includes fruit and vegetable juices, such as apple, pear, peach, orange, lemon, and strawberry juices. In addition to these, they also provide pulp, essence, pumice, and related products. Their offerings also include clear sweet potato and clear hod juice concentrates. Yantai North Andre Juice Co.Ltd. product portfolio is extensive, making it a one-stop shop for customers seeking various types of fruit and vegetable juices. Yantai North Andre Juice Co.Ltd. maintains a market capitalization of $13 billion, broadly in line with the industry peer group. Yantai North Andre Juice Co.Ltd. trades at a lower price-to-earnings ratio of 14 times and a lower price-to-book ratio of 1.67 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 5% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, expansion of market sales and increase in sales volume and sales revenue have been significant contributors to revenue growth. Additionally, successful listing on the Shanghai Stock Exchange, development of new quality customers and sales channels, and increased demand for healthy and pure natural juice have also played a crucial role. Furthermore, growing public awareness of dietary nutrition in developing countries, expansion of operation scale through establishment of subsidiaries around major apple-producing areas, and development and investment in NFC fruit juice project have all contributed to revenue growth. The company's ability to continuously improve living standards, upgrade consumption concepts, and improve production technology for apple juice concentrate has also been a significant driver. In terms of regional revenue growth, the Americas have seen a 42% increase, while Asia has experienced a 22% increase in revenue. On the other hand, Africa and Europe have seen declines in revenue of 48% and 85%, respectively. Conversely, the primary drivers of revenue decline can be attributed to several factors. Decrease in inventories, increase in operating payables, and decrease in operating receivables have all contributed to a decline in revenue. Additionally, lease income has decreased, and equity in subsidiaries has increased due to acquisition of establishments. The regional breakdown also reveals that Africa and Europe have seen significant declines in revenue, while the Americas and Asia have experienced growth. Overall, the company's ability to adapt to changing market conditions and expand its operations in key regions has been a key driver of revenue growth. Net income and profit margins. A changing landscape, the net income of a company has undergone significant fluctuations between 2021 and 2025. Initially, it increased by 106.7% from RMB 160,015 to RMB 330,345 in 2025. However, this growth was short-lived, as the net income decreased by approximately 28% from 2024 to 2025. Despite this decline, the year-over-year increase of 18.44% in 2025 suggests a positive trend. The profit margins have also undergone changes during this period. The net profit margin increased from 18.4% in 2021 to 19.7% in 2025, while the operating profit margin rose from 18.4% to 19.6%. However, the gross profit margin decreased from 24.79% to 24.26%, indicating a slight decline. The reasons behind these changes are multifaceted. The significant increase in government grants recognized in profit or loss contributed to the growth in net income between 2023 and 2025. Additionally, gains on disposal of non-current assets and fair value changes arising from financial assets also played a crucial role in boosting net income in 2025. The fluctuations in net income and profit margins can be attributed to various factors, including changes in government grants, asset disposals, and financial expenses. These factors have had both positive and negative impacts on the company's financial performance, resulting in the observed changes. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the provided information, the company has achieved positive operating cash flow, which is a crucial indicator of its financial health. A closer look at the data reveals that the net cash flows from operating activities have been substantial, amounting to $491,783,138.20. This figure is indeed positive, as stated on page 174, confirming that the company is generating more cash than it is spending on operational expenses. The company's debt level has undergone significant changes over the past period. According to the extracted summaries, there are two notable increases in debt levels: a rise of $22,722,020 and an even more substantial increase of $114,242,830.18. These figures indicate that the company's debt burden has grown substantially. In terms of interest expenses, the picture is somewhat mixed. While there was no change from RMB 37,033 to RMB 37,033, a decrease of 10% compared to the previous year suggests some cost savings in this area. However, a more significant increase from RMB 76,780,000 to RMB 82,754,645 indicates that interest expenses have still risen overall. The company's financial performance can be analyzed through its operating and investing activities. In terms of operating activities, the segments that stood out were those related to sales and services, which saw a significant increase of 28.5%. This growth was further boosted by a substantial rise in refund of taxes and surcharges, up by 137.4%. On the other hand, the company's investing activities experienced a decline, with proceeds from disposal of investments decreasing by 29.9%. This indicates that the company may have struggled to generate returns on its investments, or may have been forced to sell assets at a loss. Overall, while some segments showed strong growth, others faced challenges in terms of investment performance. Management is optimistic about the company's future growth, citing successful research and development projects that have met technical and economic feasibility studies. This investment in innovation is expected to drive future success. In terms of strategy, management aims to strike a balance between risk and return, minimizing potential negative impacts on operating results while maximizing shareholder value. To achieve this, they are diversifying the company's investments and businesses, reducing exposure to single industries or regions through effective risk management policies. To ensure financial stability, management will regularly monitor liquidity requirements, maintain adequate cash reserves, and negotiate with suppliers to ease cash flow pressure. This proactive approach is designed to mitigate potential risks and support long-term growth. The company has made significant moves through acquisitions and divestitures in recent years. In terms of acquisitions, the company acquired Aksu Hengtong Fruit Juice Co.Ltd. in 2023 and Fuxian Hengsing Juice Company Limited in 2024. These acquisitions are likely aimed at expanding the company's market share and increasing its product offerings. However, it appears that the company has not made any notable divestitures in recent years, despite some domestic juice concentrate enterprises being expected to exit from market competition. No specific details on these exits were mentioned. Overall, the company's focus seems to be on growth through strategic acquisitions rather than divesting existing assets. The company's financial strategy has been focused on rewarding its shareholders through dividend payments. As per the information provided, a cash dividend distribution approach was adopted, resulting in an aggregate cash dividend of Rm 100,256,400 being distributed to all shareholders. This indicates that the company has indeed paid dividends to its investors. However, there is no clear indication that the company has bought back shares as part of its financial strategy. The information provided does not mention any share buyback initiatives or programs. Therefore, it can be concluded that while the company has prioritized dividend payments, it has not engaged in share repurchases. That concludes the financial summary for Yantai North Andre Juice Co.Ltd. Feel free to comment below, and I will be happy to answer them when possible.